Good morning, I'm Tony Callam, the editor of Eureka Report, and this is Macro Monday. I'm joined as usual by Callam Pickering, our economics editor.
Good morning.
Good morning, Callam. Welcome to the show. Now we're going to be having some economic data out this week, and probably the biggest one, which a lot of people are focusing on, is the Thursday labour data.
Yeah, so this is one of the ones that markets closely watch on a month-to-month basis. Now, currently the market's expecting a result of around 9,000 jobs created in the month of December. This compares to around 39,000 jobs created last month. But more broadly, the trend has been fairly weak throughout most of 2016. So on a trend basis, we're only creating about 3,000 to 4,000 jobs per month. So if the employment figures do match market expectations, then that's going to be a pretty strong result. Now, personally, I'm probably more interested in the full-time versus part-time divide. Now, over the past 12 months, we've actually seen a decline in full-time positions. Now, this normally suggests that the economy isn't travelling particularly well because a strong economy is usually creating lots of high-quality full-time roles. So we need to begin to see some sort of turnaround in that full-time, part-time divide. And when we do begin to see that, then that will obviously be a good sign for the economy.
What was the main reason behind the uptick in November?
Well, from month to month, we do see a lot of volatility with the figures. So it's not unusual to get a result of this nature. It's whether we continue to see stronger results in the coming months. So if we do get a 9,000 increase in employment this month, then that suggests that some of the strength that we saw last month was actually genuine versus standard monthly volatility.
And as you say, the important thing, or the interesting thing, will be full-time versus part-time. What's been the trend in that over time?
So over time, we have seen somewhat stronger growth in part-time versus full-time. There is a casualisation of the Australian workforce, but this has really picked up in the since the global financial crisis. Over the past couple of years, we've actually seen about 60 to 70% of new jobs have been part-time. And in a historical sense, part-time employment is actually accounted for around 1/3 of total employment. So we are seeing a significant pickup in part-time employment over the past decade. And ideally, we would begin to see that turn around as the Australian economy strengthens.
Let's move on to the property market now, and there's a bit of data out this week. Tomorrow there's some housing finance, and later in the week there's building approvals.
Yeah, so two important data releases on the housing market. One looks at demand for housing, the other is on the supply side. Now, beginning with housing finance, we've seen a bit of a pickup in investor activity over the past 6 months or so. It hasn't quite returned back to its peak, but it's certainly heading in that direction. So it'll be very interesting to see whether that continues. Now, if we do continue to see strong investor activity, then that's obviously going to be pretty good for house prices, house price growth. But at the other side of the coin is that we've got a little bit weaker activity in owner-occupiers. So those looking to buy a new home to live in activity in that sector has been somewhat weaker over the past 6 to 12 months. And we have seen ongoing weakness with first home buyers. So they continue to struggle to get into the market. Now, with regards to building activity, we continue to see strong activity in residential construction. It has been one of the bright spots for the Australian economy over the past couple of years. At the same time, though, we have seen a significant drop-off in building approvals. Now, traditionally, building approvals leads building activity by around 12 to 18 months. So what we're seeing in building approvals should lead into lower residential construction activity over the next 12 to 18 months. So it's going to be interesting to see with this release this week whether we are continuing to see strength in residential construction or whether that market has perhaps already peaked.
So this data will really, it's a bit of a lagged indicator of what's going on?
Yeah, that's right. So it's going to show us the activity that occurred in the September quarter compared to the building approvals data, which is showing us what might be happening at the end of this year or in early into 2018.
Okay, plenty of interest there. Now, the other thing, I suppose, overseas is we know on Friday that Donald Trump's going to be inaugurated, but there's also some important data coming out of China on their GDP numbers.
Yeah, so I guess a lot of attention is obviously going to be given to Trump's inauguration. Now, it traditionally wouldn't be market moving, but given it's Donald Trump and given some of the things he might say between now and the inauguration, you never know. So there could be some market volatility and fluctuations over the course of the week relating to that. The Chinese GDP figures are always of keen interest for market participants. Current expectations is that Chinese GDP rose by 6.7% over the past 12 months. Now, traditionally, they sort of meet market expectations. There's always some sort of, I guess, cynicism about whether the data is accurate. There's a lot of analysts who believe, for example, that the Chinese economy is growing at perhaps closer to 5% rather than the 6.7% that the official figures indicate. So there's going to be a lot of keen discussion regarding those data when it comes out on Friday afternoon.
Yeah, I suppose for Australia, the keen interest in China of more recent months has been on commodities, and there's been an uptick in commodity purchases, but there's also, some doubt as to whether that's going to continue through into 2017.
Yeah, that's right. So strong growth in commodity prices has certainly helped Australian miners, and we've seen that in the Australian trade data, which came out last week. We've returned to a trade surplus for the first time in a couple of years. So that's obviously good news for Australia and Australian miners. With regards to the Chinese GDP figures, the thing that's going to be most interesting for Australian market participants is going to be infrastructure investment. So we're going to be interested to see whether that's holding up quite well, because if it is, that suggests that there's going to be strong ongoing demand for Australian commodities, and that could help to keep commodity prices high over the next few months.
Yeah, we'll take a keen interest in that. Well, thanks very much, Callam, for coming in to Macro Monday. We'll see you again next week.
Thank you.
Now, I can do one of two things. I can either start spending 100 hours a week trying to find what are the new and emerging opportunities, or I can find someone like Intelligent Investor who's got a track record of doing the work for me. Intelligent Investor's it's my turbocharger.